What is going on, everybody? And in this video, we're providing a state of the market and stock picks for August 26, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market in which we are in. Right now, if you cannot see technical wise, we are looking like we are trying to retest the 4,300 potentially tomorrow. Um, Maybe we gap up into here and then we dump off. But the real question is tomorrow is we got a special somebody. We got a special guest appearance tomorrow at 10 a.m. Eastern Standard Time. You're going to have Federal Chair Powell speaking at Jackson Hole Retreat tomorrow. But with that being said, you do have some other data. You have the PCE, which in my mind, nothing at this point really matters. What really matters is that we have Powell tomorrow. He's going to give us insight into how hawkish the Fed is really going to be. Now, you've had Fed members talking, and I've continually regurgitated the same thing over and over and over, is that they've been saying that they are coming in around a 75-point basis move. The futures are pricing in a 75-point basis move in the next meeting, and more so because it is still very, very high. It's still at 8.5. It needs to come down and way down. And to be able to do that, you still have to keep hiking rates until it comes closer to that 2%. How long is it going to take for the Fed to get us to that 2%? That is what you need to be paying attention to. Not if we just peak and start coming down. That doesn't mean we're going to drop like out of the sky and then everything's just good again. It's going to be very volatile. It could go way down, could go way back up. It's going to take time to be able to determine if we've actually turned around. You're going to need, even I think one of the Fed members came on and said you needed at least like a 3-month span to really determine if it's coming down. And so every time you get one dip, you need 2 more reports to determine if that dip was the peak or not. That was a turnaround point or not. And so that's where we're leading to. So again, a lot of the data, in my mind, it may short term move the market a little bit, but as far as like directional change, you are more waiting for Powell tomorrow. And then next week you have the ECB inflation rates coming out on Wednesday, I believe. And that is really what's going to matter, because I think right after that, I think on the 18th of next month, you're going to have the U.S. core inflation. And so if we can determine what's going on with the ECB, if they get even more inflation that they have to continue to raise rates, and something I've already forewarned a while back, we weren't expecting a 50-point basis move. They came in a 50-point basis move when they were only expected to do 25. It in turn have only they haven't raised rates, I think, in like a decade. And so now you're having massive issues around the world. The US is essentially playing this whole revolving door with Ukraine to help build back GDP. We did have a GDP report today. Things aren't getting better, right? Like they're already bad. Just because you hit estimates or barely got under or barely got over doesn't mean anything, right? Maybe short term the market will move, but it's still really bad. And so being said, we have to get another month of data to really determine what's going to happen. But until then, we're going to have the Fed, we're going to have the ECB next week, and then you're going to have another core inflation, and then you're going to have monetary policy come out towards the back half of September. That is really going to determine if that's another 75-point basis move. We are starting to see that transition in the housing sector as far as mortgages and everything. That's starting to slow way down. And this is just the beginning, right? Like if we get another 75-point basis move and then potentially another one, we are running out of Fed meetings though. I think after this one, I'm trying to think. I think we have one more meeting after this one, and then that's pretty much it for the year. And then the new year we'll roll in, and we'll get a couple of them. But the Fed is really projecting that 2023 is when inflation is going to like come to a halt. So we'll see, right? You can't predict it's going to do it now. I mean, maybe we haven't seen the worst of it. Maybe because normally the back half of the year we do run. We get into that. We have kind of a down October, and then you get into that Christmas rally and you try to run. The market seems to be trying to do that because it doesn't want to just sell off anymore. It's taken a heck of a beating beginning half of this year, so it tries to make up for it in the back half. Midterm elections are coming up, and then once all that stuff is done, we might get a nice run. It really just depends on what happens with the Fed. If people are worried about recession, how panicky do they get is a question, right? People are dipping into their savings. They're maxing out credit cards right now. The biggest thing is to watch is if they find that they can't get work because of inflation rates are hiking for those people that are trying to experiment to do whatever they're doing outside of work, where in fact the workload has been picked up by people that are already currently working. What happens there? How is that going to unwind? And we're going to see that play out in the next couple of months. And then if these rates continue to get hiked and cutbacks continue to be applied on, you can see where this can spiral out of control, and you can induce panic at that point. But I think potentially you could get a bit of a rally up to October, and then in October you might get a little bit of a sell-off, a little bit of a scare there, especially getting that whatever our monetary policy is going to be at the end of September, rolling in October, could lead to a major pullback or starting to sell, getting into a panic mode. Although tomorrow I think could kind of pull that pin, depending what Powell says. Again, his words are really going to matter tomorrow. If he comes out again, normally he's been good. He's been very generic about what he says. But the fact that, he came in at a 75-point basis move when they only thought 50, and then they come in at another 75-point basis move, and then potentially a third 75-point basis move, that is concerning, right? Like I don't think that's ever happened in history, back to back to back to back, right? 75-point basis moves. That should tell you what kind of problems we're having. So again, the stock market isn't the economy, right? The stock market will move off of headline news. You got algorithms that are programmed to go off of headline news, so it'll move off that. But again, if it's the same news article, it dilutes every time that news article comes out, and so you have to be mindful of that. And then once it won't make a move. Once that article comes out, it won't make a move eventually, and then the market will just keep pushing up until it gets new bad news, and then it will start changing directions at that point. So we're waiting to see again on Powell. So be ready on the dime. I haven't taken any positions today, and I'm really looking at tomorrow to kind of see what happens. It could again go really bad, could go really, really good. We don't know. But again, if we do go upside, I honestly don't know how we could break 4,300. I could see us pumping up to that. But if we start stalling there, this thing's going to start coming back down. Potentially, it may only hit 4,250 and then just start dying off, making a higher low, and then start dying off because we broke the trend, retest it, and get as close as we can to that line, then drop. Maybe even fill the gap, 4,230, and that's about as far as we go, and we start dropping. Very well could. So that's what I'm watching tomorrow. Now, I'm going to briefly touch on a lot of the industries like I normally do because that's important. Bitcoin, again, it's going to be whatever the market has. I could see Bitcoin revisiting the 19K mark. If it doesn't break that, again, you've already had your first retest. So coming back down to this level, you could potentially be looking for a break here. So just be mindful of that. It could be consolidating. It hasn't really broken out of that 24K mark. So it could just be consolidating here. But if it does break down, get some pretty heavy selling from that point. So have to see there. Let's look at BA. BA again, same thing, just like the market. I think you could retest up to the 174 and then potentially sell off from that point. But we will see on that side as well. The chips have been really strong. The bill was passed for chips, so we're seeing some strength there. The thing is, can this thing keep going? Chips again, a lot of the forward guidance does not look bad. guidance are looking bad in the next quarter or two. Really said Q3 is going to matter. It's really going to dictate how we finish off the rest of the year, I think, in my opinion. Otherwise, I think we could just be stagnant because the market really doesn't know, and you're really waiting on trying to determine if we are officially in a recession. Just depends on how you define it. So, but chips, one to watch. They showed a lot of movement, so that's why I want to watch those into tomorrow. Nvidia didn't do so hot, but it doesn't matter. The market's still pushing up because of the bill. MU actually did really good as far as chips today. Could potentially get a nice push up to 63, maybe even attempt 65. So I'm going to watch those tomorrow. Banks, let's see what the banks are at. JPM, nice little bounce. Could be a retest of this 1520 EMA daily, essentially run that 118 mark. See where it opens. If it does open below 118, I think we're going down for potentially a lower low here. And so watching that closely tomorrow, watching banks. Again, it's all weighted upon what Powell's going to say, how hawkish he's going to be. So I'm not going to give you 20 tickers when you don't know what's going to happen. You're waiting on one man, and every word that comes out of his mouth is going to dictate the direction. You're going to see the whiplash until he's done speaking, and then you get full digestion of what's going on. So even if we start selling, we could get some massive selling, then pause at one point. And then we may take it into the weekend and then potentially gap down, or it could be the opposite. We potentially push up. I don't think, in my honest opinion, I don't think we're pushing up because I don't think there's going to be anything that Powell's going to say about dialing back on rates, especially when your inflation rate's still at 8.5. I mean, it could even come down to 7.9. The inflation rate is still extremely high. You can't say that it's getting better, but you can't. The market's not going to keep basing off of hopium. It's going to need actual data to prove that it's coming down. Yes, and if it does come down to 7.9, yes, it's getting better, but you're going to have to continue to push rates until they get down enough. So just doing it and then letting it, that's going to do fine. No, you got to keep applying these rates because again, it depends on how big of a jump that is on the next report. Is it going to jump down to 7.5? Then, we might actually be making some progress. But if it just jumps down to 8 or just jumps down to high 7s, it may be anywhere in the 7s, to be honest, right? That's still not great. You're still going to have to keep applying pretty heavy rate increases until that inflation comes down. And again, it's not the exact tool, right? That the tool is not going to stop people from purchasing food or buying energy, right? But it's going to push people to have to work more than 40 hours a week that are struggling already and get second, third jobs to just pay for food and a house over their head. Right now, people, and again, mortgages and all those are dialing back. Right, you're destroying destruction, demand destruction. If I could speak. Is what's happening. And again, you're getting the billions to Ukraine and then buying supplies is what's helping the numbers to some extent. It's what helping provide jobs, potentially even extra jobs that people are picking up. So it really just depends on time is what's going to give us the correct answers. So this isn't going to be a quick process. And something I've been kind of reiterating over and over is it's not going to be like last year where it dipped and just ripped out of nowhere and then just kept going. It's not going to do that, right? Not this time. This time you have inflation. You're battling inflation, and it fluctuates. It's volatile, extremely volatile, especially when you're talking food and energy, the necessities, and that's what is driving the inflation. Now it could cool off, right? But people need food and energy, right? And so if there's no way of alleviating some of that that's strong demand by pricing oil so high that people just won't drive anymore during the weekends and really dial back, that's gonna just destroy your demand. And so then the prices come down, but the prices are starting to skyrocket because you're getting ready to go in the winter months. And so these are other big things that are concerns here. So even though these bills that are passing, they're still printing money, right? And it seems like every bill that comes out, there's some sort of billions upon billions of dollars going to Ukraine so they can keep help circulating. Circulation of money is important. If there's no circulation of money, then you start getting into deflation and stagflation, right? And stagflation is more so when there's hardly any circulation of money. So the U.S. is trying to prevent stagflation by keep allowing this circulation of money, keep sending billions to Ukraine, somebody that needs it, that has to keep spending it because they're in war. Again, if that war ended tomorrow, we could actually be in more trouble. The U.S. would be in more trouble if that happened, in my opinion. So this war is continuing to go on to help get us out of inflation. Russia is still really in really bad inflation. So there's also a lot of different sanctions and stuff placed on Russia, so that it's not just inflation, but their demand is pretty locked down, or their resources are pretty locked down. So with all that being said, it was a pretty long rant, but much needed. Just trying to get further clarification on kind of what I'm picturing, kind of what I'm seeing. Again, I highly suggest you come up with your own thesis, not just mine, and base moves off of mine. I think you should be thinking on your own. Take what I take, to take pieces what fits your thesis, and then go out there and do what you do. So until next time, I will see you guys later.